Good morning, traders. Welcome. This indicator said it's gonna go down. The divergence is there. ICT. Okay, good morning. This is Saturday morning, and I'm recording this video in reference to to price action for Friday. So, this is where the market closed on Friday, and as you can see, we still close on the weekly bearish order block. Um, well, I wasn't look forward for this price rejection here, but it's also good that we have reacted off of this area and price has regained its strength. So once again, welcome back, and I welcome back, and I would get into what we have. So if we still have time after the whole session, then we can talk more. So, and also expect my weekly videos on Sunday. So stay tuned for that. Now, the Euro US dollar daily contract for Friday, 5th of April 2024 contract deliver an indecisive up close candle that open and rally lower and tap on the the daily bullish order block form on Monday, 1st April 2024 down close candle that will deliver price higher into the opening price of the weekly bearish order block, and market close on that area perfectly. Just the what I mean is that the Friday open rally higher a little bit, then rally lower and tap on this bearish order block. Then we reverse, which will deliver price higher and price still close on this weekly bearish order block. This red line is a weekly bearish order block, including this one that we reacted off of around here and we go lower. So they both were the weekly bearish order block that we have reacted to, and price has delivered efficiently lower. So if this is the order block, then this is a weekly proportion block. All right. This is an order block, weekly order block. Then this is a weekly proportion block also. But let's not waste time on that. The current price delivery has shown an increment between the weekly and the daily or order blocks, as both is being utilized, and those this might lead to a range in price delivery between the high of Thursday and the Friday low, meaning that since these two areas are very showing showing their effects in price, then we have this high and this low. So we have these two range currently on this market. So whenever price goes to the premium, we can decide to engage to be a seller, or when we come to a discount, we can decide to be a buyer. So all this depends on the specific parameter that is going to be shown next week. And also, if euro find its way higher into the Thursday high, that will be a liquidity sweep, but still wanting the candle body to close below the weekly bearish order block. And over time, we still are much bearish on euro. That means overall, we are looking forward to bearish price delivery. So what I actually mean that if we open next week, maybe either Monday or Tuesday, and we deliver above this high, that will probably be a liquidity sweep that will deliver us lower, because on a monthly and weekly perspective, we are not looking for much higher prices according to the price delivery. So that is to show that since the whole scenario is not really that clear, we will need to take a vivid look into the weekly and look at things, and also not engage much on the monthly or on next week. So we have to see what next week delivered, or what is delivered next week, and how markets use these or that the PDRs. and all that is not it does not mean that you cannot trade, but you need to wait for the parameters that work best with you. So because there are randomness that could eventually take place, since we are in between the high and lows, and also we are very close to the discount price, that is the midpoint between the high and the low. So those parameters are very important. Now, this is the DXY daily contract, and on the DXY daily contract, we can see that we actually delivered into the weekly fair value gap high, and we fall short of a little, just one tick above the daily bearish bullish order block. So we did not tap on the bullish order block. Now, if we are still going to be bullish on euro or on DXY, that means we might open delivered and tap on the bullish order block before going higher, or we might open delivered to a lower time frame PDRA before going higher. But all these are going to be determined by how the market treat these areas, as we still have a bullish order block here, and we can see this whole down close candle is the bearish order block. We tap we have trade into it to the consequent encroachment, that is the midpoint. Let me say the mid threshold, not consequent encroachment, the mid threshold. If we mark these two, we see exactly we just fall short of the mid threshold of that bullish order block. You can see that, I don't know if it's very clear. This is where we stop, and this is the mid threshold for that order block. Now, if you have all these parameters that you work with, I think it is very important so you know, and also have a specific range. But currently, going forward next week, we don't have we're going to see which of the high, it's either the weekly high or the previous week high or previous week low, which is likely to be taken. Then we look forward to that first before we think about the next thing. So it's very important that you stick, and let's see what next week candle will be. I will be sending the weekly market review on Sunday. So stay tuned. I'm just going to go directly into the 4 hourly contract for DXY. And the 4 hourly contract, now we can see how effective this is, what I was calling. And this green line here is the bullish order block, the weekly bullish order block. And if you see how we take this sell side liquidity, because this is also a sell side liquidity, and how we take that, we rally hack, form a fair value gap, we fill it, and price delivered and tap on this what 4 hourly bearish order block, which lead to this price delivery impulsively lower, and that cause what that reversal in price. Well, as we have already made use of this PDRA, we no longer have any tendency to be afraid. And also we should know that there is a buy stop above this price currently right now. So that buy stops will also serve as area of liquidity that we want to see the market tip its hand to, and observe. And also, now we want to see how far can it go lower before we go higher. If we did not, we might still come and tap on this weekly version of a value gap. Either we did not take this low, or we might take that low and tap on the bullish order block. Neither of these will still be okay with the price delivery. So also, we are looking at this too high and this low as our current range, right? So we want to see which of the range will likely to be taken first before the other. But since we have these two academic, and also we have taken a higher time frame buy side liquidity, so and that higher time frame buy side liquidity lead to this price delivery. And if we have to continue going lower, right? Let's, for example, the bullish order block and the fair value gap will not be effective anymore, and we have to go lower, then we have these areas to look out for, and the PDRA that we can eventually make use of is really not here, right? Because we have used this bullish order, bearish order block, but we can still find a lower time frame. And again, the consequent encroachment of this what candle wick, all right, so can also be very good to look out for. So that will be it for the 4 hourly contract on the XY. So I'll be going to the euro dollar. um yeah, so this is the euro US dollar 4 hourly contract, and also we have almost same price scenario here, but on the weekday, on the euro we can see that we tap on the daily bullish order block that deliver us higher after we fill this fair value gap, take us lower, and now we are back. And also we still close at the bearish order block, the weekly bearish order block. So I have a short statement here, let me read that before we proceed. The euro US dollar 4 hourly contract shows how nicely price delivered lower into the daily bullish order block and price higher into the weekly bearish OB, just like I have explained. Now on the 4 hour, we can see that euro price into the 4 hourly fair value gap or CB, and that deliver price impulsively lower into the daily bullish order block and price back and price what back, and we can look forward to the 4 hour swing high buy side liquidity to be swept next week. That is, I'm looking forward to this. I think since we have make use of this, I need to take that off my chart. Now I'm looking forward to this short time buy side liquidity to be taken, and there is a 1 hour area of point of interest here that I'm looking forward for price to react off of from. That is, we are not going higher, and if we are going higher, we still have this bearish order block that we can look out for very critically, that might lead to what a how am I going to say that might lead to a reversal in price. That if we take that Thursday buy side liquidity there, we can look forward for price to react uh off of this area. So casting forward, we are going to wait for more confirmation to give us the parameters that will make us trust that euro will deliver lower or higher. So it is very important that we know that we have a very big need to wait for confirmation before going in to risk anything next week. Very critically, as the bias for next week is really difficult to classify. For me, it might be very easy for you, but for me, I admit that not going in next week, I am having a problem determining having a clear bias. I can tell you areas where the market should react off of from, either if we are going to be bullish or if we are going to be bearish. But to tell you that we are going to be the whether the weekly candle next week is going to be bullish candle or bearish candle, that is what I cannot depict right now. And or whether we are going to only utilize previous week buy side liquidity or previous week sell side liquidity, that is also another thing that I don't have a clear narrative on currently. So I am looking forward, if even though if I'm going to engage, I'm going to engage on within a short time liquidity rate and not a long time price rate. So I will go to the 1 hour before we go to the XY and explain the 1 hour on the XY. But now we going to go to the euro US dollar hourly contract. Let me extend this. So I have a short statement here, and after I read that, before we dive, more and explain more of this scenario for us. Okay. So the euro US dollar hourly contract shows how nicely price delivered on intraday price action for Friday 2024, Friday 5th of April 2024. contract. Now, the daily profile is an obvious 8 o'clock a.m. New York local time as the high of the day that deliver price lower after sweeping short time buy side liquidity. That is the daily profile now, alright, is an obvious what 8 o'clock a.m. This particular candle is the 8 o'clock a.m., which is the non-farm payroll that gives us this swift price delivery lower. After we take what short time buy side liquidity, we take that buy side, and before you know, we price rally lower impulsively. And the low of the day is formed at 9 o'clock a.m. New York local time that delivered into the daily bullish order block and price rally higher impulsively into the weekly bearish order block. And overall draw on liquidity is sell side liquidity next week. Now that means next week or offer, that means I'm still looking on long time perspective, I'm still looking for sell side delivery, right? But currently we need to be very, very conscious about what we are looking out for. So now to explain this, we have this ICT unicorn model clearly here. We have a fair value gap inside a bearish order block. So next week, I am looking forward for price to get into these areas of interest. Then we can engage to be a seller and not going to target all the way here, but any short time price delivery, because I'm not sure if this whole lower time frame PDRA is going to be effective enough to to take us lower. And also, if we take this buy side, then uh, we can now look forward to these areas I call out, this bearish order block. If we take that buy side, then we have this fair value gap and this bearish order block. So let me put this on that bearish order, this fair value gap, because it seems like this fair value gap has already been tapped. I hope this video is insightful. Please, if you find it interesting, interesting and insightful, please give us a thumbs up and give us a like and a subscribe. It does not cost you anything to subscribe to this channel, please. Thank you and God bless you. So that's the only way you can support me. I'm not asking you for anything or any money or anything. Just give me a thumbs up and subscribe to my channel, and that's all, so that you can, and also it will afford you to get update my weekly update. So now we can see that we did not get into this area, which is this fair value gap and this bearish order block. So I'm looking forward to that now to be, so if this failed, then we can look forward to this to read us lower. And if the both fail, if the three of them fail, that means that we are going that means that what price is now heading towards what buy side delivery. So I will definitely get this off my chart because I can clearly see them. So I've just put it in reference. You can go to your chart and try to find these areas of interest and mark them out, all right, for your own personal consumption, because it's very, very good if you have all that uh, areas for yourself. So looking at the XY hourly contract, we have seen where price reacted off of from, which is the bearish order block, both the daily or both on the hourly and the 4 hourly bearish order block. And now also, which is a very good area, we have the volume imbalance here that makes price to congest here before going lower. And also now, if we have to be bullish, we have this fair value gap here that my price might react off of from afterward we take this short term sell side liquidity. And if all this did not hold price, then we can also come towards this area, this buy side inefficiency side sell side imbalance, which is the fair value gap, or this bullish order block. Neither of them could be effective enough to give us a nice swipe price delivery higher. And if they failed, that means what? The XY is going to be bearish. So thank you. See you.